Thank you for joining our call. Mr. Bill Decker, Chairman, and Mr. Moshe Zeltzer, CFO, are on the call with me today. We are excited to meet you again at our quarterly video meeting. Today, we have a comprehensive agenda. We will start by reviewing our financial results, business trends, and growth strategy. After that, we'll have a Q&A session to address any questions or concerns you may have. Let's begin with the looking forward statement.
Ladies and gentlemen, thank you for standing by. Welcome to the BOS conference call. All participants are at present in listen-only mode. As a reminder, this conference call is being recorded and will be available on the BOS website as of tomorrow. Before I turn the call over to Mr. Cohen, I would like to remind everyone that forward-looking statements for the respective company's business, financial condition, and results of its operations are subject to risks and uncertainties, which could cause actual results to differ materially from those contemplated. Such forward-looking statements include, but are not limited to, product demand, pricing, market acceptance, changing economic conditions, risks in product and technology development, and the effect of the company's accounting policies, as well as certain other risk factors which are detailed from time to time in the company's filings with the various securities authorities. I would now like to turn the call over to Mr. Eyal Cohen, CEO. Mr. Cohen, please go ahead.
Thank you. The first quarter reflects record net income of $740,000. We have achieved this goal gradually and consistently as a team, reflecting our collective effort and dedication. Our trailing 12 months revenues amounted to $43 million, EBITDA $3 million, net income of $2.1 million, and EPS in the trailing 12 months of 36 cents. This result put us on track toward achieving our financial targets for 2024, which are revenues of $46 million and net income of $2.2 million. We have a relatively strong balance sheet with $34 million assets, $20 million shareholders' equity, which count to 60% of the assets, and surplus of cash net of loans of $1.7 million. Our business performance, combined with our healthy balance sheet, provide us with the right ecosystem for thinking, exploring, and developing engines for future growth. The following slide presents BOS current valuation ratios based on the trailing 12 months. The market cap ratio to net income is 7.7. The market cap ratio to projected net income for year 24 is 7.3. Market cap ratio to EBITDA is 5.3, and the market cap ratio to the shareholders' equity is only 82%. Despite our positive trends and progress, our market cap remains roughly unchanged. It was $15 million on December 21, when we earned only $500,000 a year, and remain $50 million today, when we earn more than $2 million, also 365%. I hope BOS will add analyst coverage this year to explore BOS value opportunity to more investors. Business trends. The supply chain division has expanded the list of electronic manufacturers it represents and increased its sales force. Hence, we expect revenue growth from those products in 2024 and beyond. In addition, we are facing increased demand from the Israeli defense segment, and we anticipate it will positively affect the supply chain division revenues this year. The intelligent robotic division is successfully transitioning from the Israeli civilian sector to the Israeli defense sector, and will promote its continued growth in 2024. This division revenues in the first quarter of the year do not reflect its potential revenues for year 2024 because a significant portion of the orders we received are in the production phase. The RFID division's sales are mainly to logistics centers in Israel. We have significantly expanded our offering for new segments and expect this will yield revenue growth in year 2024. I want to turn the call over to Mr. Ziv, the chairman. Please.
Thank you, Eyal. Good morning and afternoon, everybody. In reference to Eyal's review and within a broader framework, BOS's first quarter record net income are the primary effect of the comprehensive competencies build-up process that Eyal has been leading for the past years. When in effect, the meaning of it is rejuvenation of most of BOS's core business, while bringing it to a consistent course of sound organic sales and profit growth as we see. Specifically, first quarter was characterized by the continued implementation of a significant steps to strengthen capabilities, improve activity, and expand organic source of income, as well as strengthening the organizational structure and the basic process in the activity. Looking ahead to the rest of the year and next year, combining our strong competences with favorable market dynamics in the Israeli defense and high-tech segments, we're optimistic about the future. We plan to continue expanding the business lines of all of our division in the premium segments in Israel, which should lead to a further growth. In addition, we plan to expand the RF division footprint to the production floor and warehouse to the retail stores. I trust BOS team, led by Eyal, to achieve these challenging goals. Our team's dedication, expertise, and hard work have been instrumental in our success so far, and I am confident that they will continue to drive our growth and achieve our goals. Thank you for your attention. I will now hand over back presentation to Eyal. Thank you.
Thank you, Ziv. At this time, we begin the Q&A session. If you have questions, please unmute and present yourself, while all other participants remain mute. Thank you. Please.
Eyal.
Hi, Shuki.
Hi, how are you?
Hi, thank you.
I would like to know why the revenue of the first quarter of this year was less than last year, and is there any impact of the war that influenced this quarter? And what do you think about the gross margin? Do you think these levels are going to stay? Do you think they can improve? And do you think that the second quarter could be better because of the war, or there's no impact? That's all for now.
Okay. Regarding the decrease in revenues compared to the first comparable quarter, it's not assigned to any effect. And because of that, we keep on our outlook for the year. We keep it as at a level of $46 million. And regarding the gross, by the way, part of the decrease is related to deferred revenues of the robotic division, which had very low revenues in this quarter because most of the orders are in process. And we recognize the revenues upon delivery. And regarding the war, regarding the situation in Israel, about 75% of our business is linked to the Israeli defense segment, and we are trying to increase this portion. And absolutely, it will support our continuing growth during this year, and I believe beyond.
Okay, so you see another space of improvement for the gross margin?
I'm not sure regarding the gross profit margin, but regarding the revenues, we will bring the $46 million this year, and we believe we will continue the growth in revenues next year as well.
Okay, thank you.
Thank you. Hi, Tom.
Hey, congratulations on the great quarter and the record earnings. It's nice to see that. I know you just mentioned that about 75% of your revenue is defense related. What was this a year ago? How much has the defense business grown?
I guess it was about 60%, and it will continue to grow because as long as the robotic division grows, I think that 90% of its revenue is attributed to the defense segment. And regarding the supply chain division, we are seeking for more opportunities in the defense segment to expand our offering, so we will gain more bids. For example, in the recent months, we integrated a new line of product to the defense segment, which are wires. And in these wires, we represent American company, which is WireMaster. And we believe this line of product will increase the revenue from the defense.
Okay, that's great to hear. I know the last caller had talked about the first quarter revenue being a little lower. During the last conference call, you had said that there was some business in Q4 that was being pushed back to Q1 and Q2. With everything that's happened and given your projection of $46 million in revenue, can we expect a stronger Q2 and Q3 than last year?
I think we don't provide the outlook based on quarters, but in general, year 2024 will be better than year 2023 by revenues and by the net income.
Okay. And then finally, it was nice to see the profitability in the robotics line. If you had to estimate which one of your segments would have the greatest revenue growth, do you think the robotics is finally poised to have a significant revenue this year and maintain the profitability that you've now achieved?
Yeah, I think the robotic division has passed the process from gross losses to gross profit, then after from operating loss to operating profit, and then after from break-even to profit. So it's a process, it's a natural process. And we see that in the recent 3 or 4 quarters, it is break-even, and then in 4th quarter last year it became profitable. And we are working very hard to continue this trend this year. And absolutely, I think that this year the robotic division will have the highest growth rate, but we have to work very hard to deliver, to produce all the product, to install all the project that we are committed to the defense industry.
Another aspect of that is that I think that in the robotic division, we have successfully built a relatively strong competitive position in the market, in the segments which we are focusing on, meaning that you can, and everybody, can trust that if we keep the total work that we're doing there, then revenues and profits will follow. Okay, because the competitive position is there, and the segments are poised to grow during market trends. Okay.
Okay, and then one quick follow-up. I really appreciated the slides showing how undervalued the company is. By my math, I now have your book value per share of over $3.40 a share based on this quarter. Is there any M&A activity, either you acquiring some other companies, or has there been interest in possibly you being acquired? I can't understand why your stock is so undervalued, and at this time, is there any M&A updates you can give us?
Regarding the stock price, yeah, you're right. As reflected in my slide, the price is undervalued. The company is undervalued. The market. The step that I believe we need to do beyond the M&A, which is not to increase the share price, but for the long term to grow the company. So what I think most of my effort are to have an analyst coverage to the stock, which I believe will have immediate impact on our valuation. And the process takes too long. I hope that it will be that today we have on the net a report, but I will try to complete the work during the second quarter. Regarding the M&A, we are seeking the opportunities for M&A, and for all the divisions. We have several processes that we are checking, and this is the status for now.
Thank you for taking my questions.
Thank you, Todd. Any further questions? Okay. So we appreciate your active participation and the valuation insight of Shuki and Todd. If you have any further question or concern, please feel free to reach out to us. Thank you for your time.
Thank you, everyone. Thank you.
Bye-bye.